If we think that it's going to go up here and we have this one single candle all by itself, it's sharing no space, or let me say it this way. The space between this candle's high and that candle's low is not being shared in any other candlestick after it's formed. And then on this candlestick, it came down and touched this candlestick's low, which is 339.25. The next candle to the right of it is, see, every single time, every single time, that candlestick is the same price, 339.25. So that's why I just went in at the market, because it would have been my fill one tick above that, which is what? 339.50. But can you see that that fair value gap is there? Were you here live when I was explaining it to you, watching it form? As soon as you see this candlestick close, the next candlestick, as soon as it opens up, my mind is immediately, bang, I'm watching that. I want to see that price tick. Once it books that price and offers it to me, mark it in. Plus one tick, obviously. So if it would have dropped down into the halfway point that makes this fair value gap, if it would have went down into the halfway point level, I would say hypothetically, this is where I would add, but I can't do it because I'm giving examples to Caleb to practice. He cannot do more than one contract. He has to do at least 2 to 3 weeks of doing this. And it's not about being right, son. I don't care that you take losses. It's not about that. It's about seeing it in the chart and engaging with it. Because everybody's losing trades in the beginning. Everybody's going to do it wrong in the beginning. But the way you learn how to do it correctly is this. This is it. Now imagine how many pages it's going to take for me to do what I just did today in a book. Can't be done. The fucking thing would be, it would be huge. And I would never be satisfied with the delivery of how I would have to explain it. I can put static charts into a book. I can give you the details, but it's not the same as seeing it live. Watching how fucking precise it is. Tell me, okay? Tell me how many times have you been into a trade using anything else and you get in and it's drawing against you, you're going in drawdown, or it's just sitting around and won't move for you. It's just sitting around and saying, I don't fucking trade like that. I don't trade like that. I don't want to be in trades like that. I want to know when the market is likely to move. It needs to move. And it needs to be on the basis of fucking time, Dave. Time, Mr. Anderson. You are in the fucking Matrix. And you're listening to fucking Neo. What time? What time is that candle? Oh, shit. That's the 1050, 1110 macro. Holy shit. What did you say about them macros, ICT? What did you say? They're going to do what? They're going to run for liquidity? Oh, shit. What is that? Oh, shit. What is that? That's somebody that knows what the fuck's going on. That's somebody that knows the future. That's the one with the authority. So sit your raven ass down. So right here, we have a very, very low drawdown entry. That's perfect. Perfect. Absolutely perfect. Over time, what you'll do is you'll see these gaps like this. And then you'll look and see if the number one candle has a wick. This is extra credit and no extra charge. If this candlestick, I showed this to my private mentorship student this morning. I was whooping up on NASDAQ, a long, short, long. I traded the Asian session with them last night. I traded the London session with them. I traded the New York session with them. And I just did this one too. Honey, I know it just looks like it's too good to be true. I know it just looks like that. But I see red when I want to see red. Period. This wick right here. You want to see arrogance, motherfuckers? I'm showing it to you. This wick right there. There to there. I'm going to take the quadrants off. I want to see somebody trade like this. I want to see somebody trade like this. I want to see it. I want to see next to zero drawdown. I want to see precision. I want to see that shit. Oh, bro. Shut up, bro. Show me your after the fact shit. Fuck all that. We're in a different year now. If your mentors are not coming out here proving that they know the algorithm, they can do this kind of shit, fire them. Fucking fire them. They're not worth your money, and they sure as fuck ain't worth your fucking time. This wick right there, consequent encroachment. You will learn over time trusting this, Caleb, but you can't trust it just the first few times that you see it. It needs to be months of it. You won't need to place your stop loss below the number 2 candles low. You can use one tick below the consequent encroachment of that wick right there because it's a gap. It's 2 layers of gaps. And it's already likely to only trade in the upper half. And if we see it trade down here like that and run up, if you started your stop loss there, you can roll it just below there. And then as you leave this high, then you can place your stop loss near the lower quadrant of the fair value gap. And that's this. In case you know what I'm talking about, it's this. You have to always grade your inefficiencies. Okay. And by grading, then what you're doing is you're putting the lower quadrant, upper quadrant in like that. Okay. So when you're bullish, the best perfect scenario is the market only drops in to the upper half of that gap and it leaves that lower half untouched. And that's indicating that it's extremely bullish. You're on side